Assalamualaikum warahmatullah, and a very good day to all students out there. Today we are going to discuss question 4 from final exam March 2017, and that question is on Mfrs 141 biological assets. So make sure you have the question with you and start doing the question with me. Let us look at the first question. You are asked to state three criteria for biological asset, recognition criteria for biological asset to be recognized in the statement of financial position, right? So that is according to Mfrs 141. So this is a repetition of question that we have discussed before this, right? Question June 2018. So let's look at what is the answer, and I think you still can remember. The first one is that the entity control what? Control the asset as a result of past event. Number two is about the probable economic benefit. So you will say, like a proper sentence, it is probable that the future economic benefits will flow to the entity. Future economic benefit here refers to future economic benefits associated with the asset. So future economic benefits associated with the asset. You can add there with the asset. Okay. And the last one is the cost of the asset, not the cost, but the fair value, which is the mean measurement here, fair value, or the cost if the fair value cannot be measured reliably. So the fair value or cost of the asset, here is biological asset, can be reliably measured. So those will give you 3 marks. Okay, let us look at Deardear, a business involving in agriculture. They involve in deer farming. And they started off with 201-year-old deer. 201-year-old deer. And that was the one that they have. And they raised this deer to a marketable age of about 3 years. So you can only sell the deer by the time it reaches 3 years old. And the deer will also be slaughtered at the age of 3, meaning that if you are to sell the meat, the slaughtered meat is from the 3 years old deer, right? So this is actually what we call a harvested product of the biological asset, the so-called agricultural produce, right? The information given regarding the livestock, the deer, for the year ended 31st of December 2016. So information given here is at the reporting period here is 1st of January 16 until 31st of December 16, and the date given is the reporting date. So you are given the information here. The first one is the information on the purchase of the detail that you have of the deer just now, right? So information below is regarding the livestock. These are the details. The one that were there as in the balance brought down, is from 1st of January 2016. There are 201-year-old deer. So this refers to the one here, right? 201-year-old deer. And then you have a new purchase, which is on the date of acquisition. That new purchase is the 50 years, age 1.5 years old. There's another purchase somewhere in the middle of the year, date of acquisition, where you purchased another 30 years. And I'm going to show you in this question how to set up the biological asset account in our last section later. But today we'll just focus now on the requirement first. So these are the information given regarding the fair value less cost to sell. Fair value less cost to sell. Fair value per deer, meaning that per one deer, right? So you have been given the one here. This one is the one beginning of the year. This is the one beginning of the year, which is for the 1 year old year. And this 1st of January is the fair value given, fair value less cost to sell, given for 1.5-year-old deer that were being acquired, so on the day of acquisition. There's another 2-year-old deer that you acquired 30 of them on 30th of June, another date of acquisition. And the remaining here is the information on the fair value as at the end of the year, the reporting date or the one at the end of the year. You are required to calculate the carrying amount. Carrying amount means to calculate the balance available in the biological assets at the fair value less cost to sell, and also to calculate the revenue. So revenue will be from the gain on fair value change of biological assets. So let's start by doing something different now. We're going to do the calculation for carrying amount. So we have actually several ways to do this, but I'm going to show you the simplest way, which is by just using a simple calculation, taking the fair value of the different age of biological asset at the end of the 31st of December 2016. Okay. So let's start by doing that first. As I said, we will do it here, just somewhere here. Mind me with my... So we're going to calculate here. We put here carrying. I'm doing number 2. The first one, carrying value. Carrying value or carrying amount as at 31st of December. Okay, as at 31st of December 2016, all the deer that were available before this will grow in terms of its biological transformation. So if you look at what you have, at first you have the 200 1-year-old deer here, right? So this one, by the end of the year, 31st of December, the 1-year-old will now be, the one will grow to become 2 years old. How many of them? The 1-year-old at the end of the year, 31st of December, there are still 200 of them, right? And then the second one is the deer that you purchase. The 1.5-year-old deer, if they are 1.5-year-old on 1st of January, by 31st of December, they will be 2.5-year-old, right? So 1.5 now, they will turn to become 2.5-year-old. So This is the age that we are looking for. And then how many of them? 50. And then the third one is that 2-year-old year. This one. That was purchased on 30th of June. So the 2-year-old after 6 months, because from 30th of June till 31st of December is 6 months, it will just be 2.5-year-old. But the number is different, 30. So we put here 30. So those are the years that you have. And now what you're going to do is you're going to look at what are the fair value of the 2-year-old year on 31st of December 16. Okay, let's look at what we have here. 2-year-old year, 31st of December 16, 2-year-old year. So it is 116. We need to multiply by that, and you can take your calculator, you get the answer. The second one is for the 2.5-year-old. So this is number 1. This is number 2, second one. So you look at the fair value, it is 118. So we will multiply with 118, right? And the third one, we have the 2-year-old now becomes 2.5-year-old. Right, 2.5-year-old. So it's the same thing again, the same thing. So number 2 and number 3 take the same price because they have the same age, only that they have different unit. So 118. And therefore, this one will give you 23,200. Take your calculator, have you, and make sure you have that now. 5,009. And the one here is 3540. Take your calculator and calculate with me. And this one will give you 32,640. And so meaning that this will be the carrying amount to be shown in the soft P. And this is the carrying amount shown in the soft P as your biological asset. So you have already get the part to be scored, which is for the first thing. So this is done, carrying amount. So for that part on calculation of carrying amount, right, that one is also can be done by doing the so-called biological asset account. I will show that later. Now we're going to calculate the revenue. So the revenue here will be from either from sale of biological assets, right? If you go and sell them, or revenue can also be from gain on fair value change of the biological asset. So since we do not sell any of this, none, so our revenue will just be from our gain. So let's do this here. We start, and you know, as you know, I know that you need to do this. You need to go and find what are the gain on fair value change, which is your so-called revenue. And our gain will be from the gain due to price changes, as well as gain that we will calculate due to physical changes. Remember, price changes means same physical characteristic. Here we are talking about age as the characteristic, but we are talking about different date. Different date mean the date that were given here, all the date given here, right? What you have here are all very important. So let's look at the first one. Same physical characteristic but different date. So let's start off by using different colors to differentiate what you have. So I use blue. So let's look at what we have. We have, in our case, 1 year old year. So I put here 1 year old year, right? And our 1 year old year, which is this one, the 200, we need to look at the price of 1 year old year. Before that, let's just erase this thing first so that we won't confuse ourselves with what we earlier wrote. So we erase to make your life even better later. Okay, now you can do this. 1 year old year, look at when you have it at the beginning of the year. Okay, 1 year old, beginning of the year. Remember, different date. The price is 90. Compare with 1 year old at the end of the year. The price is 95. So you will take the difference between the two prices, 95 minus 90, and times 200 year that you have. All right. So that one will give you 1,000, the first one. The next one will be calculating for the second age group. Yeah. Second age group is this year, 1.5 year, 1.5 year old. And how many of them? There are 50. The same thing, take 1.5, just repeat the same process. It's easy. 1st of January 2016, the price is 100. Compare with the same age, 1.5, as at the end of the year, and the price is 110. So the difference is 10, right? So 110 minus 100. The difference is 10, so you will have here to be 500. Then you repeat the next one. Yeah, the next one, which is for our 2-year-old year. So we repeat for our 2-year-old year, this one. So for our 2-year-old year, it was purchase, just like the 1.5-year-old purchase. So you look at the date of purchase. This is the date of purchase or the date of acquisition. Yeah, these two. But here is the beginning of the year, the one here. And we compare this, 2 years old, 115. We compare with the 2 years old on this date, 2 years old, which is 116. Look at the purple color there. So it will be 2-year-old. How many of them? 30 times 116. So colors will make you easier to refer. So if you can do this, why not follow me? Or you can also use highlighters to highlight. Make sure you have different colors, maybe like 10 colors, buy a set of them. And you will get the figure to be 30 times 1, so 30. And the total coming from price changes would be 1,530. You don't need calculator for this. You can just use your skill. That is not yet done, ladies and gentlemen. Not yet done. You need to do the second one, which is due to physical changes. Due to physical changes. And due to physical changes means we are saying that we are talking about same date but different age. So by meaning to say that we are going to focus on all this date, which is on the reporting date. The date is as at the reporting date, yeah, which is the date here. But we are going to look at the biological transformation, just like what we did for our calculation for carrying amount. So here, what you need to understand is that we are going to just focus on the fair value given on 31st of December 2016, which is on the reporting date, because we are looking at the changes to the physical attribute of the deer. So the 1-year-old deer, right, will now be, if it's at the end of the year, because beginning of the year, the 1-year-old deer was on 1st of January 2016, so it becomes 2-year-old, right? So the 1-year-old deer here will have to become now become 2 years old. So look at the 1-year-old price. 1-year-old price, this one, the 1-year-old price was 90, right? Look at the red color there, 90. But that is not the issue. We are not looking at the price here, as I mentioned. We need to look at what is the price of the 1-year-old deer with a different characteristic. So look at the just as at 31st of December. So meaning to say that you cannot look at the beginning of the year. You need to look at the end of the year. So 1-year-old here, this is 1-year-old. By the end of the year, it will grow to become 2 years old. It grows to become 2-year-old. This one, the first one. So now 95, okay, 95. And when they are 2-year-old, it is 116. So you compare 1-year-old to 2-year-old. So it becomes, how many of them? 200 times 200, yeah, times 116 minus 95. So you will get 4,200, the first one. Then we use a different color, the second one. The second one is about this 1.5-year-old on 1st of January. So the 1.5-year-old, the second one here, 1.5-year-old, will now grow to become 2.5. And 2.5, right? Because after a year plus one more year, so you have 2.5-year-old. So look at the price of this 1.5-year-old, which is this one, 110, right? Compare with 118. Look at the price as at 31st of December. So we put here 1.5-year-old to 2.5-year-old. The number is 50 because it was purchased, so number is still there. Maybe some of them died, that's another issue. All right, so it becomes 118 minus 110, and therefore that will give you 400. So take your calculator and calculate with me. The next one is, yeah, use that color. The next one is for this 2-year-old deer. 2-year-old deer. So here you have 2-year-old deer, this 2-year-old deer, which is on 31st of December. Which one? This one, right? Number 3. 2-year-old deer. Yeah. 31st of December. And 2-year-old deer, the price as at 31st of December is 116. Because you purchase them on 30th of June, it will grow up to become 2.5-year-old, right? So here from 2 to 2.5-year-old. Why? It was on 30th June, so you're looking at physical changes, so you're going to compare 2 with 2.5. So this one, the second one, so it will be 118. Yeah, let me just check. This is 2-year-old, so 2-year-old, I have the wrong column being referred to. So 2-year-old year, 31st of December, and now become 2.5-year-old. Therefore, that one is how many of them? 30. So it is 116 and 118. 118 is the price here at the end of the year for 2.5, and you compare with the price for 2 years old, because there's a gap of between the age. 2 years old, at the end of the year they grow to become 2.5-year old. So that one will be minus, deducted with 116. So if you do that correctly, you will get 60. So therefore your total would be, so you have the total here. The total for the second change, which is the physical change, right? That total would be how much? It would be 4, you can just check my calculation, 4660. If you add up 4660 with 1530, you will have the gain on fair value changes, and this is your revenue. How much is that? That revenue would be how much? That revenue would be 6190. 6190. So you are done with the question. First part. As I said to you, I'm going to show you the biological assets account. So if you were to show the biological asset account, you should also see that your biological asset account should derive the same figure here. So just prepare that here to give some idea for you what happened to my biological asset. So we just put a simple account here. Beginning of the year, the balance. You will have to find the balance at the beginning of the year. The balance would be 200. The number of the year is given here. The balance here, 200, right? Okay. So 200 times the value at the beginning of the year on the date that you purchase, right? So the value is 90. So times 90 if you were to do the account. And that is going to be 18,000. Okay. Then that is on 1st of January. And second one, 1st of January 16, you purchase Dear. The purchase, this one. With this one is done, now we are doing this. Purchase 50 Dear. So when you purchase debit, biological asset, credit bank. And that one would be how much? It would be 50 that you purchase. The price on 1st of January for the 1.5-year-old is 100. So times 100. That will give you 5,000. So 5,000. And then another purchase is on 30th of June 16. So 30th of June 16, you purchase a different deer, 2 years old, 30 of them. The fair value on that date is the one given here, yeah, 115, and therefore it will become 3450. So 3450. And the last journal entry is to record this one, yeah, gain on fair value, which happened to be on 31st of December 16. So this will go to Sopel. We put here fair value gain. How much? The figure is 6190. 6190. So if you total up here, total up 18 plus 5000 plus 3450 plus 6190. So total up all that, you will get 32640. So this is going to be carried forward to the soft P, balance carried down, should be 32640, 32640. And this must be the same as this, right? So it will give the same answer. Next is to look at part 2 of the question. Part 2 is a different question. Assuming that on 1st of January 2016, 1,000 fawn were born, so which is the baby deer were born, so newborn. So newborn, the minute you born, they were born, they are already gained on initial recognition. They are already gained on initial recognition. And then you are informed that the fair value of the newly born fawn is 50. As at the end of the year, the fawn was 1 year old and has an estimated fair value of 85. So after a year, of course, it will grow to become 85. You have to prepare the journal entry. So you need to prepare, first one is the journal entry to record the gain on the birth of the fawn, which is gain on initial recognition of the fawn, right? So that one is happening on 1st of January 16. So debit biological asset 1,000. The value is 50 times 50, right? So therefore 50,000. That happens on this date. And credit, don't credit bank, you don't purchase. This is just a gain because it was just from natural birth. So credit the gain on fair value change. And this is in Sopel. And this is what you call gain on initial recognition. So gain on initial recognition. So this is gain on initial recognition. So I put here not gain on fair value change, but gain on initial recognition. Okay, recognition. It goes to the Sopel. It goes to the Sopel as an income. How much? 50. The second transaction is to record the fair value change, which is to look at the second part. So now you know that 1st of January, the fair value is 50. But 31st of December, the fair value is 85. So there is a change, which is the fair value change of 35, right? So this 35 that you have, yeah, is an increase. So increase means your gain. So there is a gain on fair value change of biological asset. So debit, biological asset, credit, gain on fair value change. And this is in SOPL. So the units are still the same, 1,000, but the price would be 85 minus 50. This is actually price changes, right? Price changes. And therefore, that one will give you 35,000. Okay? So you are done with the journal entry, and that's it. That marks the end of this question. Thank you. You have got all the 19 marks. Congratulations. Go and practice, practice, practice. It will make perfect. All right? With that, Assalamu alaikum warahmatullahi ta'ala wabarakatuh.